Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is October 18 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0565 took place when the MACD line moved upward from zero line, prompting a signal to buy. This resulted in a price increase of around 30 pips, but did not reach the target resistance level. Business sentiment data from the ZEW Institute for Germany and the Eurozone exceeded expectations, while retail sales in the US continued to decline, albeit better than analyst predictions. All of these put pressure on dollar and supported euro. As for today, there will be a report on consumer prices for the Eurozone, especially on the core prices. Its growth could lead to a sharp rise in euro. The speech of ECB President Christine Lagarde will also be a factor in the market volatility. For long positions, buy euro when the quote hits 1.0593 and take profit at the price of 1.0636. Growth will occur, but it will depend significantly on inflation. High inflation will force the ECB to raise rates, leading to a rise in euro. When buying, make sure that the MACD line should be above zero, or rising from it. Euro can also be bought after 2 consecutive price tests of 1.0570. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.0593 and 1.0636. For short positions, sell euro when the quote hits 1.0570 and take profit at the price of 1.0536. Pressure may return at any moment, especially if inflation in the Eurozone decreases sharply. When selling, the MACD line should be below zero, or is starting to drop down from it. Euro can also be sold after 2 consecutive price tests of 1.0593. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0570 and 1.0536. The next stage of our review is the next major. It's time for GBP-USD. This trading plan is presented by Petar Jakimovic. GBP-USD has been trading sideways at the price of 1.2200, and Petar sees the triangle pattern is in a creation, and there is potential for the breakout or rejection of the resistance. In case of a breakout of the resistance at the price of 1.2220, there's the chance for the upside movement towards the upside objective at 1.2265. In case of the rejection from the resistance level at 1.2220, there is the chance for the downside rotation towards support at 1.2150 and 1.2130. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Topos. Early in the Asian session, gold is trading around 1937, above the 21 SMA, and around the strong resistance of 6-8 Murray level. On H1 chart, we can see that at the opening of today's session, gold began with a strong upward movement, leaving a gap at about 1922. Gold has gained over 20 USD since opening trading today, from 1922 to 1942, completely covering the gap it left at 1932. The instrument reached a new high around 1942.50. Technically, on the H4 chart, gold is very overbought. So, we expect a strong technical correction to occur in the coming days if gold falls below 1942. The negative outlook could be confirmed if gold breaks the bullish trend channel formed since October 13. The key turning point is located around 1920. If this scenario occurs, then we can expect the metal to reach 5-8 Murray level at 1906 and even the 200 EMA at 1889. Gold is expected to consolidate below 1942 in the next few hours. So, we could expect a technical correction. It will give us an opportunity to sell with the target at 1926, 21 SMA. This level is the key for gold given that the bullish cycle could resume and the instrument could gain momentum. Therefore, we could expect it to reach 1951 and 1968. The bearish force will prevail if gold breaks below 1926. Then we could expect it to continue falling and the price could reach 1900 and even 4-8 Murray level at 1875. And finally, here's Laurie Bailey with AUD-USD currency pair forecast. Let's have a look. Yesterday, the Australian dollar rose by 23 pips and came very close to the target resistance level at 0.6388. The modern oscillator is close to the zero line, creating a good chance for a bullish breakout. If the price surpasses 63.88, the next target is 0.6448, the MACD line on the daily chart. Overcoming this line will open up the target at 0.6514. A brief downward move may occur when the price surpasses yesterday's low at 0.6335. The safe drop limit is the support level at 0.6295. If the price continues to stay below that mark, the next target will be 0.6171, the low of October 13, 2022. On the 4-hour chart, the price is trying to rise above the MACD indicator line again, as the Marlin oscillator signal line is already above the zero line. The main scenario for the pair is moving higher. That's all for today. See you online again soon. Good luck.